Good afternoon, students. Today we are going to start our subject corporate income tax and planning, that is business taxation for MBA second year 4th semester specialization subject. We have completed income from house property, business and profession, capital gains. Today we are going to see our fourth chapter, that is income from other sources. Income from other sources. It starts from section 56 to 59. Definition of income from other sources. Any income which is taxable under the Act but does not find place under any of the remaining four heads of income, that is salary, house property, business or profession, and capital gains, will be accessible under the head income from other sources. As we are learning corporate income tax, we don't have this salary. We have completed house property, business and profession, and capital gains. So the remaining chapter is income from other sources. Okay. Now second point, incomes chargeable under the income from other sources under section 56 subsection 2. What are those income? First is dividends, income from winning from lottery, crossword puzzles, races, card games, gambling or betting. Interest on securities. Securities here means shares, bonds, debentures, all these are known as securities. Then we keep fixed deposit in banks, so we get interest. That interest is known as income from other sources. Then interest on bank loan is also income from other sources. Next, income from letting of machinery, plant, furniture and building, if not charged to income tax under the head profits and gains of business or profession. Any fees or commission received. Income of a tenant from subletting the whole or part of the house property. Now, income, it comes under house property, but what do you mean by subletting? Subletting, the simple meaning of subletting is port bhare karo. While solving the problem, I will explain you what do you mean by port bhare karo. Please, port bhare karo. Next, remuneration received by teacher. The remuneration is received by teacher from exam. When he does exam work, he will get the remuneration. Then that comes under income from other sources. Next, income from royalty, directors' fees, agricultural income from lands situated outside India. Agricultural income in India is exempted, but if the land is situated outside India, it is taxable under the head income from other sources. Next, income from markets, ferries and fisheries. Ferries here means shipping. Ship and fisheries. Casual income. Casual income means same. Casual income means income from winning from lottery, crossword puzzle, races, card games. It also comes under casual income. Next, salary of member of parliament, member of legislative assembly. It is known as MP and MLA and MLC. All these comes under income from other sources. And next is ground rent. All the income under these heads are charged. Next important concept in income from other sources is dividends. Now what do we mean by dividend? Dividend means the sum received by a shareholder of a company on the distribution of its profits. There are three important points related with dividends. First is dividends from any Indian company, whether it is in the form of equity shares or preference shares. These dividends are exempted. Next, dividends from a cooperative society. Dividends from a cooperative society is taxable. Next, dividends from a foreign company, and dividends from a foreign company is also taxable. So the dividends from Indian companies, from equity shares and preference shares are exempted, whereas dividends from cooperative society is taxable and dividends from foreign company is also taxable. Next important point is deductions allowed under the head income from other sources under section 57. Collection charges paid to a banker for collecting interest. All these dividend and interest is deposited in bank, and an SSE has to pay collection charges to a banker, and those collection charges are deductible. Next, current repairs expenses, depreciation and insurance premium is also deductible. In case of a family pension received by the widow or legal heirs of the deceased employee means dead. Standard deduction at the rate of 33.5% or rupees 15,000, whichever is less is deductible. Next important point is amounts not deductible under income from other sources. It comes under section 58. Those are personal expenditure, payment of interest or salary in a foreign country without deduction of tax at source. Third, 100% if cash payment in excess of rupees 10,000 or rupees 35,000 is done. Fourth, expenses incurred or loss in lottery, crossword puzzles, card games, gambling, etc. Next important point is interest on securities. Now, what do you mean by security? Interest on any security of the government, debentures or bonds of a local authority, company or statutory corporation. Now, there are four types of securities, kinds of securities. Tax-free government securities. On this, interest is exempt from tax. Less tax government securities. These are issued by central or state government. Interest is not crossed up. Tax-free commercial securities. Tax is paid by the company. Next is less tax commercial securities. If the interest is in percentage, not to be grossed up. If net amount of interest is given, then it has to be grossed up. Now, we need to know what do you mean by grossing up? Gross up. Simple example, if you want a lottery of rupees 100, as per the rule of the government, 30% tax is charged on this rupees 100. So 30 is rupees tax. Net amount is received by the lottery winner is rupees 70. Okay, this 30 rupees tax is known as TDS. That means tax deducted at source. Okay, now the income tax people want the grossed up amount, and the grossed up amount is rupees 100. So we need to give rupees 100. Tax is deducted rupees 30. Net amount received is 70. But in income tax purpose, you need to show rupees 100. It is known as grossing up. Now, the grossing up for assessment year 2019-20 for individual, the rules are applied, and the rules are as follows. Interest received on tax-free government securities, it is exempt. You can see here, tax-free government securities, interest is exempt from tax. Interest received on less tax central or state government securities, it is not to be grossed up. Next, interest received on savings, taxable bonds 2003, if interest exceeds rupees 10,000, then the formula has to be applied, and the formula is interest received multiplied by 100 divided by 90. Next, interest received on debentures of a local authority or debentures of a company listed in the recognized stock exchange in India. The formula is interest received into 100 divided by 90. Next, interest received on other debentures which are not listed, interest received into 100 divided by 90. Next, income from winning from lotteries and crossword puzzles, and the formula is winnings received into 100 divided by 70. Okay, now seventh concept point of income from other sources, and it is very important, and the point is interest on the following securities bonds deposit is fully exempt from tax. It means tax is not charged on the interest of these securities. First is 12-year National Savings Annuity Certificates, National Defense Gold Bonds 1980, Special Bearer Bonds 1991, Treasury Savings Deposit Certificates 10 years, Post Office Cash Certificates 5 years, National Plan Certificates 10 years, National Plan Certificates 12 years, Post Office Saving Bank Account. As we have saving banks account in commercial banks, in the same way, Post Office also deals with saving bank account. And if you keep money in that saving bank account, you will receive interest on that. In case of an individual account, maximum exemption limit is 3,500, and in case of a joint account, maximum exemption limit is rupees 7,000. Post Office cumulative time deposit account 15 years. Public account in Post Office, interest is exempted to rupees 5,000. Now we have seen the theoretical part of income from other sources. Now we will see